If you're confused about what's going on with the Indian stock market, why it's been underperforming pretty much every other market, then stay tuned. In this video, I'm going to explain what are the factors which have been weighing down on the Indian stock market and what is the way forward, what's the outlook for the Indian stock market. The Indian stock market have done very well for a very long time, up until late 2024. Since the beginning of 2025, the market has come under pressure, and there are some very good reasons for that. In this video, I'm going to extrapolate and highlight what are the key drivers for such de-rating of one of the fastest growing economies in the world, and what's the lesson for investors to derive from this. So the very first factor, I would say, which is the primary factor, I think, in my view, for the way the Indian stock market has become unloved of late, is expensive valuations. After having done so well for a very long time, investors have finally come to the realization that the amount of return from the Indian stock market is not commensurate with the value being paid by these investors. So they have started to look elsewhere. The expensiveness of the Indian stock market is very much evident in the price to earnings ratio and any other financial metrics you can look at. Yes, there are pockets of opportunity. There are always pockets of opportunity, even within highly expensive markets. But overall, the market has become quite dearer for most investors, particularly for overseas investors. And the situation in the Middle East doesn't help. It's worth bearing in mind that India imports 80% of its oil from abroad, and the bulk of that comes through the Middle East, through the Strait of Hormuz. So any prolonged disruption in the Strait of Hormuz is not going to be a good news for the Indian economy, because the economic growth has been affected, and it has slowed down already, and any disruption, any prolonged disruption, is going to exacerbate the already scuppered economic growth in India. Inflation is another problem, and again, the Middle East situation makes matters worse. Inflation, particularly for an emerging market country, is not a great sign. And the governments, despite having taken quite a few measures to bring the inflation down, it still sort of remains high. So that's another factor. Another key driver, I would say, why the stock market has become unloved is the strength in the US dollar, which I think which is a given. When the rupee weakens against the dollar or pound sterling, I'm a UK-based investor, then the market becomes unattractive for international investors, because we have to convert this money back into sterling, into pounds or US dollars, right? So if the Indian rupee weakens, that means we end up with less money when we convert it back into our home currency. So that's a big headwind for the Indian stock market. Obviously, unemployment is quite high in India, in excess of 5%. But what worries me, what worries investors in particular, is the youth unemployment has been quite high. Yes, they are super qualified. India outsources its IT sector heavily, but despite all of that, the unemployment amongst the youth remains a key issue for the Modi government, and that's sort of part of the reason investors have been looking elsewhere. And I think the final one, which is also worth mentioning, is India has become a bit of a laggard in the artificial intelligence race. India doesn't make any chips. India doesn't make any AI models. India doesn't have any foundries for semis or anything, So India is not giving Taiwan or South Korea or the US run for their money. So there is or even China. So India has become far less competitive in the AI race. The IT outsource, which was one of the biggest strengths of the Indian economy, because India was outsourcing its IT sector due to this huge, immense potential, that has become less attractive due to the emergence of artificial intelligence, right? So that's another serious headwind, and the government should seriously consider ways to come up with something which can be as competitive, as serious, and as globally recognizable as some of the other firms which I've just named from other countries. Having said all of that, I'm a value investor myself. I don't believe it's all doom and gloom for India. India has immense, huge potential, in terms of its demographics, in terms of the untapped potential in the country. So I think it could be a very good entry point for serious long-term investors. Yes, we have seen outflows from the Indian economy to the tune of 20 billion, about 18 billion left last year from overseas investors. They withdrew their money. This year, another 18 to 20 billion is being withdrawn, and we're not even halfway through the year. But in my personal view, the outflows are likely to slow down, and people might be considering re-entry into India. And I would encourage and I would suggest to serious investors that there are quite a few opportunities in India right now. And I think some of the stocks are trading at a bargain price in India. Obviously, this is all general market commentary. This is all educational. I can't give you any financial advice. You have to do your own research. But I would finish this video with just this, that markets don't give you opportunities too often, particularly for markets with this sort of immense potential. So it's probably time to reconsider your take on India. Until next time, all the best.